Hi, this is Alex Perini, just with a quick update from Summerhill Financial Services. A couple of things to mention. Firstly, we've just started a new financial year, and although this does happen every year, just a friendly reminder that for anyone that is looking at their portfolio in early July, it will look like it has gone down in value. Now, it may have gone down in value if markets drop, but there's another reason that happens at 30 June each year, and that's because of the drop in the unit price after a dividend has been declared at the end of the financial year. The unit price at 30 June will incorporate the value of that dividend. Then in July, the value of the unit price will not incorporate the value of the dividend, so it will reduce by the amount of income you will receive, but it just takes a couple of weeks for that income to actually be paid into your investment account. So for a couple of weeks, it may look like the investment portfolio has dropped. There's nothing to worry about. By the end of July, everything will look back to normal. Now, on the topic of investments, some of you may notice some cash accumulating in your portfolio, and in the most part, we've been holding off from recommending clients invest at present for a couple of reasons. One, because we were coming into the end of the financial year, so I don't necessarily want to buy into investments that are holding a dividend that would be paid in July, as it will just raise a tax liability in terms of the income. So in most cases, we'll be looking to hold off from making investment recommendations until late July. One, for the lower unit price, and two, so we can look at the cash distributions that will be paid and incorporate those distributions into the recommendations as well. The second reason for holding off from investing cash is that markets have had an interesting 6 months. We've seen a really strong rebound this year after the pullback in late 2018. Now, with existing portfolios and existing money, we're comfortable with how the portfolios are invested. Most markets remain in fair value range, apart from the US, which is considered to be overpriced, but we're being conservative with investing new monies. You may recall we were actually in a similar position this time last year, where we felt uncomfortable investing given valuations at that stage. We then saw a 10 to 15% pullback in markets later in 2018, and we were able to use that accumulated cash to take advantage and buy at cheaper valuations later in the year. Now, nobody has a crystal ball when it comes to investing, but we're concerned with what is the purchase cost for investing new money into a portfolio. And even though we may be sitting on a little bit of cash, actually not doing anything is still making an active decision. It's not that we're ignoring the cash. We look at the cash every week. We just rather be a bit more conservative at the moment. And if we do see a drop in markets, we can take advantage of that drop rather than investing at current prices. Now, on a final note, we just would like to say thank you for the increased number of referrals we're getting at the moment. We really do appreciate you thinking of us. As always, if you have any queries or any comments, please don't hesitate to contact us. Thank you.